Okay, well, let's get into some of your best ideas now. ProPicks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. All right, your first idea. I mean, I have a lot of questions on this one, but give me the pitch. The first one is Pemba pipeline. What's your view on it? Why do you like it here?
So really like Canadian natural gas, first and foremost. It's underpriced relative to the rest of the world. It's, we've had transportation bottlenecks, which are now easing. We're getting, LNG Canada plus a couple of other facilities, one of which Pemba is building, the first floating LNG facility alongside the First Nation, the Hassla First Nation, I believe. And so they're touching a lot of gas in Western Canada, and those volumes are going up. And we said this during the oil price downturn in 2014-15 when people were really critical of our investment strategy. And we said, we own some producers and they'll be fine on a long-term basis. But what we're concerned about is the amount of volume that is growing in North America. And that's why prices are down. And we own the companies that are handling that volume. So it's this exact same story on Pemba, that volumes are going up. They deal in volume, tolls on processing, tolls on pipeline commitments, and now a pretty vertically integrated structure with some LPG export and eventually LNG export. And then there's this data center news as well, which they may or may not be a part of. So that's kind of an upside case. But
before you expand on that, I want to ask, with all of this good stuff, why has the stock underperformed all the other pipelines?
So two reasons, I think. So the first is that, there's always a number of reasons. One thing I would say is that money started to flow into Canada and it went to the large cap names. So it went to Enbridge and Trapp. And that makes sense, right? They're easy to buy. They're in the index. And then you get the passive reinforcement cycle of, okay, hey, a bunch of, if you're in the US and you're a hundreds of billions of dollar money manager, even a Pemba is pretty small. You need the liquidity. So there was a bit of a virtuous cycle there, and then it gets bigger in the index, then the index has to buy, and so there's a passive reinforcement cycle. So that's one thing. Second thing is their growth is a little further afield, and I think people are concerned about the floating LNG project, which we are not concerned about. I think it's actually
concerned how in terms of expense?
It'll go over budget. It'll be late. We saw all the overruns with LNG Canada and Coastal GasLink, but in this case, it's actually their costs are pretty controlled because of the way it's manufactured in Korea. It gets floated over, it gets assembled, so we're not as concerned about that. And then the third thing more recently is you saw the announcement on the data center pushed Pemba back up to 58, and then it came off again when KKR started talking about shopping their stake. So sorry.
I was going to say, so there was, just to put some context around it, in the beginning of October, the Logic reports that Pemba could be working maybe with Meta. So that's totally still unconfirmed. Mm-hmm. Okay, then KKR.
But Pemba confirmed that there's something going on.
There's something going on,
but they didn't name the counterparty. And I think if they had said, yes, we're working with Meta, everything, it might have gone higher. Who knows? But again, this data center thing in Alberta, as I said, it's been a number of false starts. So I think the market is very attuned of there's these short-term bumps, but until we see something concrete, then they'll take it right back away.
This is for something called the Green Light.
Energy complex.
Yeah, Green Light Energy Complex. And that's what Meta would be. Yeah, so basically
they're I don't even fully understand it, so I won't speak out of turn too much, but basically building a large data center complex. In this natural gas report I read, it went over some of the Meta and OpenAI data centers that they're building in the States, and these things are huge. It's like 2 acres by 1 acre, just the facility, and let alone the surrounding land. So Alberta has land, Alberta has energy. It makes sense to build a data center there. We've talked about that. The question is political more than anything about, are we going to have capital that's stranded? Is Trump going to like Meta building a data center in Canada? Does he want those dollars to be spent?
What's it going to do for local electricity prices?
All these considerations. So that is not something we're banking on, but we would not be surprised, because Pemba has been very proactive in their history of getting things done, to see them involved. And I think people were surprised to see them at the top of the list versus a Capital Power or a TransAlta, but they also ran.
So it's a cherry on top, but not part of your thesis.
Exactly. And then, so they have this JV with KKR, Kohler Kravitz Robb is the big private equity firm that they've been building, joint venturing on gas projects so that Pemba doesn't have to fund these things all by themselves. Remember that, sorry, I'm not trying to be paternalistic or whatever, but you have to remember that in the last decade, all these Canadian companies were strapped for capital. Nobody would back them, right? So they found creative ways. They're like, well, private equity, guess where there's a bunch of capital, U.S. private equity, and they saw the returns, but the general market would not fund a Pemba equity issue, say. So they found this creative end around with KKR, and it's been a great thing for them, and it's been happening under the surface. And now this thing has grown to the fact that KKR's stake, I think they said, is around $5 billion. And then I just read in the Nat Gas report that I've referenced a couple of times, that KKR is buying into a JV with Sempra for $5 billion. So it's like they're rotating maybe out of Canada. And that's what private equity firms do. But now Pemba is seen as the logical buyer of that stake. So an equity issue. So there's an overhang. But I don't think it would be a bad thing if they bought it. It's just a question of the fact that I think their equity is undervalued, and so it wouldn't be as accretive at these prices as we would like.
So maybe wait for the equity issue, or you don't care.
I don't care. I buy it today.
You buy it today.
I think it's, again, on a long-term basis, it's one of the few things that's not pricey.
It's clear you like natural gas, which brings us to our second idea, which is ARC Resources. And you don't shy away from underperformers, which is what ARC Resources has been. So talk to me about why it has underperformed. Even though it's a difficult tape, it is still underperformed. And what you see is the re-rate potential.
So it's underperformed this year, I would say, and that's what we're talking about, and I get that. But actually, over the past 3 or 4 years, it was a tremendous outperformer in the space, and just generally. Again, I really, Charlie Brown with the football. I use that analogy a lot of I really try to not get too wrapped up in my own thesis. And especially when it comes to commodity prices. But natural gas is poised to move higher from here. Structurally, I think LNG Canada puts a floor under natural gas prices, which will be very nice to see for Canadian producers that have not had a floor whatsoever for the past 10 years. It's been a bottomless pit. Prices can go negative. And so that'll be good. But then there is the case that if US at $57 crude, they're not going to drill as many crude wells, that treadmill starts to slow down. The associated gas that is coming from those crude wells starts to slow down. And there's just actually less gas in the North American system at a time where LNG facility buildouts in the US is poised to double in the next 5 years. So we're using, and that's before we talk about data centers sucking gas for power behind the meter and all the other things that are going on. So I think there's a lot of natural gas in North America was so cheap for so long that we've now built a wall of demand that is coming, that is going to push prices higher. And that demand is coming from internationally via LNG. It is coming from domestically via power demand, and even just general, expansion of the general natural gas network for residential. So I am positive on that whole theme, and Canada isn't directly in that, but we've got our own dynamics going on where we're getting egress for the first time. Our prices have been lower. There's kind of like a lower bar to clear. And ARC, to me, again, it's liquid rich. So there's a lot of propane and butane and ethane in their gas, and that's what they've been priced on. But actually the gas strip side of it, I think, starts to look more exciting. And so I like it here going forward.
Were there some operational issues? That there's concerns with their Attachie natural gas play?
Yeah.
Phase 1 was doing really well, then not doing so well, and now there's questions about how much are they going to spend for phase 2.
Yeah, and I'm not a geologist, but it's about produced water coming out of the wells, and this is an issue of shale, right? It's a well-known thing in the market, but it's still a novel technological, geological advancement that people are learning about and improving every day. And so I think they'll get through it. They have a really qualified operations team, and I think they know the market's keenly focused on it, and I think they'll get through it. And that therein lies the opportunity. So you mentioned I like underperformers. Yes, in this market, there aren't very many of them, and you got to buy the quality businesses that have underperformed, that have the chance to perform in the future, and that's what we're all about.
And you said you don't mind a sideways business, if at the end it goes up.
As long as the value is that's exactly right. As long as the business is of quality, time plus quality equals results. Sometimes it's more time than you want, but we tend to try to take our time. So we're happy with that.
And is that what you think is going to happen? Your third pick is Brookfield Infrastructure. Another, I guess you could call it a sideways trader. Like it lives kind of tends to tap out at around $35 US per share. I'm looking at the US quote here. There's some volatility in there. But what's your thesis on Brookfield Infrastructure, and where are you optimistic?
So we like the underlying business, just because you've got Brookfield there sourcing opportunities globally, and they are a private equity player, so they're buying and selling things, but generally they're good portfolio managers. There is an angle of they own Interpipeline, and they bought Enbridge's natural gas gathering assets in Western Canada, so they've got a big position in a theme in a place that we like, that we think is undervalued. But they also bought Enercare, which I mentioned earlier. We like that business as well. So there's a bunch of things in Brookfield Infrastructure we like. We mostly like the 5% plus yield or the 4.84. I think I checked it this morning on the units. And that's where I see an opportunity right now, is that there is some scrutiny on the unit structure versus the corp structure. The corporation, Brookfield Infrastructure Corporation, is just a company that holds the units. Okay. So, and that was created because institutional investors couldn't hold the units. It's a Bermuda limited partnership, only Canadian listed for tax purposes. But the taxable units that the corporate structure that was created has now blown out versus the underlying partnership units. So basically, you've got the same security. One's trading at a 35% discount to the other. So for me, I go, and typically what's happened in the past has been the institutional investing community kind of loves and leaves the.
Okay, so there's BIP UN, which is the units, and then there's BIPC, which is the
corp structure.
And you're saying by the
units.
BIPUN.
Yeah, and especially as a Canadian in a registered account, because then you don't have to worry about the problem with the units is you get this horrible T3 at the end of the year that your distribution is made up of so much U.S. interest and U.S. dividend, Canadian dividend, return of cap, and it's just, and you have to wait for it. And so individual clients like we deal with don't really like that. But so what we do is we just put it all in their registered side. We treat their entirety of their accounts as one account, but we put it all on the registered side. And then you're basically buying it at such a big discount. Now, the question is whether they'll harmonize this structure at some point and either take out the units.
It's the same thing.
It's the same thing. And I mean, Brookfield's not afraid to use complicated structures and keep them and say, you guys deal with it if you want to own it. We've got lots of other people that do if you don't. So we're happy either way. But I do think there's the spread on both the partnership units for the spread's even wider on renewables now, which is interesting as well because Brookfield Renewables, because that space has seen some attention this year, right? And especially from the institutional community, but the retail community, which owns the units, is kind of sleepier and not really as willing to push the price one way or the other. So yeah, we think it's not necessarily a free lunch, but it's a nice downside protection in a name that we like.
Ryan, thank you so much for joining us and bringing these ideas to us.